one can do it better. No one can do it better. No one can do it better. Stereo, the voice.
This is to listen to, so ask not a question. Not to be taken as a simple suggestion, but a warning. To whom it may concern, if knowledge is the key, then I think it's time you learn. So there is not the problem. So leaders are acknowledged. I don't follow them. I turn into another degree. And find the D.O. to the C and growing like a tree and causing much destruction because of crushing. Complimented much, yeah, but never blushing hard like a criminal. And I'm subliminal. In my own right, it's dope because I'm original. Funky, unmistakably so. When the vocals are done, then you know. It's all a matter of setting a date for America's most complete artist. But wait, make sure you keep the facts in mind. Don't mess with the great, cause the dagger like a 9 with a voice telling you the bullet's direction. I'm talking murder, but that's another section. I need to explain while keeping my composure. There's no jerking a sucker when he knows you're nothing but a villain, and that you'll kill.
Hey, it's Soleil, and this is episode 404? 404 error of the Orange Pill Investor. And I'm half joking with the title. So today I'm going to discuss that I'm happy to report that I've been beating MSTY for the last few weeks, finally. What's up, Onan? And I not necessarily even to dunk on them, because they were winning from January, February, March, half of April, and so I really can't just declare victory. So we'll keep tracking this through probably end of the year. That's kind of my estimate. As an option seller, you don't really even have to make any directional bets necessarily. But in this case, I'm just going to assume that the bull market for Bitcoin will last at least to the end of the year, whether or not the cycles are real or not. Maybe we go into a bear market. Maybe there's a super cycle, or maybe the bull extends into 2026 or whatever. But I think a full, basically like a full year, January through December, I think is reasonable to go ahead and get in and out. It's not gonna, it won't be like, okay, trade against them for 4 years in a bull market, bear market, any kind of environment. So it's really only gonna be like a bull market test potentially. Well, hopefully. I hope we're still in a bull for the rest of the year. Um, so I'm not really betting on whether we have the bull or the bear. I'm just basically saying that if I bet that there's a bull market and I'm wrong, I get hurt more badly than if I bet that we enter a bear market and I'm wrong, right? If I stay leveraged into a bear market, then I get wrecked. Kind of like what happened in November. Continuing to hold and really even acquire more leverage in November was a huge mistake. So definitely don't want to repeat that. And there's a little bit of a double meaning there when I say it's, like it's hard, basically uh, channeling my, you got into Harvard Law School, like it's hard moment, a little Legally Blonde moment there. But it's, a lot of people say it's time consuming, or even like you have to track all of this stuff, track IV. And I didn't really do any of that for this account. So in my main account, and just to check, so I was actually a little bit worried that Misty would catch up after they paid out dividends. So were able to keep up with that 10% approximately. And so I was able to add, they automatically added like another 445 shares there. And so they caught up by about 10 grand, but I'm still beating them by about 7 grand, I believe, on approximately $107,000 initial investment. So that is nice. But in the challenge account, I don't do as much as I do on my main account as far as watching IV because I basically put a limitation on myself that I was going to trade. I was going to be fully invested like MSTY is, right? So they're going to sell covered calls. At least when I started, they were selling covered calls on 100% of their positions. And I don't really follow their trades unless somebody tips me off. And I probably need to take a look at it again because someone mentioned that they started adding some, I think, some call debit spreads or something to mitigate missing out on some of the, basically limiting their upside too much. So I think that's a little bit weird for a covered call seller to do, but maybe they recognize, maybe they've been watching uh, Jeff's MNAV spreadsheet or something and realizing where this shit could go. But my basic assumption was that MSTY would trade covered calls on 100% of their positions. So they're not really like able to go in there and say, okay, IV is low. I'm only going to sell covered calls on half my positions. So I decided to go ahead and kind of hamstring myself and put that constraint on myself as well. So I've got 569 shares and I've got 5 covered calls on. Now I did take the liberty of forming some poor man's covered calls when it made sense to do so, but there's no secret sauce that that yield max really can do, right? I mean, they can sell the 435 strike and you can sell the 435 strike. They can sell the 500, you can sell the 500. You can sell this one 7 days to expiration. You can go out to 45 days to expiration. And I think, at least according to Tasty Trades research, the sweet spot for the out of the money options is at 45 days. And I really haven't seen them doing that. And even when they want to do the weeklies, like if I'm just going to do the weeklies, I'm going to go very close to at the money because that's when you can really plow into, gathering some premium. And then if you're doing this trade yourself, I collected this $1,000. Well, I can either take that $1,130 premium and I can pay bills with it. It'd basically be like taking a dividend distribution, or I can reinvest it. I can buy more shares. I can buy some more of these long calls. And so I did have to peel off some of these long calls at like 3x profit in order to pay for some of these calls that got wrecked over the last couple of weeks. But that's why I bought them in the first place. That's what these are. And so I prefer something like this than what was reported to me that MSTY was doing. And this is just a rumor. I haven't confirmed it. But someone claimed that they were adding like some call debit spreads that had the same expiration dates as the covered calls themselves. And I really didn't like that because under 45 days to expiration is when, in my opinion, I'm targeting capturing theta. I'm capturing premium decay. And so if that's the best place, like under 60 days is the best time to start to capture premium decay, why would I buy it under 60 days? Why would I buy it with the same expiration that I'm selling it? There's no mechanical advantage there, in my opinion. You're just making a directional bet at that point. And you can argue that you're paying for the number go up bet with the short call, but that just doesn't really make any sense to me. So If MSTY has access to all of this information, and I will admit they probably do have better margin, favorable margin situation, but to a certain extent, I think that only allows them to skirt the I don't know if it's the SEC or the IRS. There's some kind of rule, but actually, I think there's several rules, but they're not allowed to just hold 100% of their portfolio in shares. So that's why they run the synthetics. There's no real advantage to that, but I think they end up getting like I don't know, some crazy 10% margin allowed. So they end up getting to stack enough synthetics to make it look like they were 100% invested in shares. So they're getting the same price or covered call exposure that they would if they were actually permitted to just buy the damn shares in the first place. So I think that the favorable margin conditions really just allows them to get back to even Stevens, really. So I haven't seen any of their trades that justifies paying them the 1% other than just, saving yourself a little bit of time. But I'm gonna go ahead and put myself on the clock. So this is 1:01 p.m. So let's if this is my one time a week that I wanted to check these positions, weekly I would be doing this on a Friday, but it literally just doesn't take any more than me looking at the account and saying, okay, this has $335 of extrinsic value left in it. Okay, I'll let this cook. The 425 strikes got more extrinsic value than when I sold it. It's got 23 days left. I could roll it out to break even, but I think I'll just let this cook. Same here. Same here. This is barely less than what I sold it for. So it took me less than a minute to just go in here and decide to do nothing, right? I don't really even need to check like this might be garbled. Yeah, I'm probably signed into the VPN. That's unfortunate. Let's see. Do I have any cash? No. Okay, so all my cash is spent, and really, I don't have to check this. I didn't even have to check this today, but that took all of a minute. And even if I was making a trade on a Friday, I only have one weekly covered call on. So this is how long it would take to roll this to next week if we pretended this was Friday. One click, two click, three clicks. And I'm not going to send it, but I mean, it's just that easy. If you want to, follow IV and give yourself the best chance to pick an entry or an exit position, you can absolutely, do that. And in that sense, you could just trade covered calls twice a year. So I know some people that don't sell covered calls in low IV environments or when the price is down. So, there's some people that would have just gone in here in March and been like, oh, okay, we went up 4x in 4 weeks, implied vol is through the roof. Okay, I'm going to sell covered calls here. And maybe you sell them through the month of March and April. And then you've had the correction from 200 down to 100, and then you say, okay, screw that. I'm not going to sell covered calls after a 50% correction. And then you could literally just do nothing again until November and sell covered calls 2 months out of the year. But you can spend as much time in there as you want to. You can be like, okay, I'm not going to sell covered calls after the 50% correction. Oh, bam, it went up 50% again. Maybe you sell them here. You can play the little up down game here all you want to. Uh, but you can only do that so often before you get wrecked here, right? You could play that game and win once, twice, but then the third time you try it, like, ah, shit, maybe you miss out on some upside here. But really, there's no, with this entire account here, I didn't track IV because I was going to be 100% covered at all times. So there's really no, there was no technical analysis that I did here to eventually, you know, out trade MSTY really. And even during the couple of months that I was getting wrecked, it was because I had so many of these long calls that were getting destroyed. So, and you don't have to do that. If you're just a pure covered call seller, you don't have to buy any of these long calls. If you're not bullish and you just want to take a non-directional approach, not financial advice, but you don't have to do this. These are printing money. Like I'm up 3x on all of these positions, and I took a few little bit of profits here over the last couple of weeks. I think I had 20 of them at one point. But all the Junes and all of the Julys got absolutely destroyed. They all lost like 90% of their value. So it's probably even going to take a lot more than a 3x on these 20. What I had was 20 positions to make up for losing 90% on all of the all of the Junes and Julys. But you know, over months and years, as long as your account is up and to the right, it's okay for it to go down and to the right briefly, during pockets of uh of corrections, right? So this can be as minimalist as you want it to be. And really, the weeklies, like, okay, five. I mean, if you're really, really dragging your feet, or maybe you have a really huge account with tons of strikes or something, like maybe it would take you 30 minutes a week. But these, I can literally, I've had these on for 16 and 19 days. I mean, I can put these on between 35 and 52 days to expiration and just literally go to sleep and set an alarm for a month later when they've got like 2 weeks left on them and then roll them. So if you really wanted minimalist, you could just trade 30 minutes a month. So the I don't have time excuse, I don't really buy it. Um, I don't do any technical analysis with this account, and it's still winning over the long haul. Now, once IMST pays their first dividend, they will probably catch up a little bit. I'm basically trading against both of those guys at this point, but I don't think it's even if they pay 10%, it's not gonna be enough for them to close the gap. And since I've taken out, well, there's still about this is about 13 grand worth of leverage right here. So if strategy takes a dump to, I don't know, 300 a share again or something, all of this leverage will crater in value. The other weird thing too is it's hard to compare trading the underlying stock versus the MSTY price because strategy kind of follows Bitcoin and MSTY kind of follows strategy, but it's technically possible for those prices to diverge because the strategy price is the combined buying and selling activity of everyone who's invested in strategy or exiting from a strategy position. And the MSTY price itself is the combined buying and selling activity of everyone that wants to own or sell off their MSTY shares. So they don't have to both go up at some kind of similar rate. MSTY looks like, what is that, about 5% of, no. Let's see, half of 400 would be 200 divided by 10. Yeah. At 20%. I don't know. I can't do math today apparently. Um, but yeah, like if strategy goes up 50% to 600, it's not necessarily MSTY is going to go up 50% to 34, 35. It could, or MSTY could go up 100%. It's just how many people FOMO into Misty versus how many people FOMO into strategy. So I wonder if it would make sense to I'd have to do some spreadsheet work. I could go and I could do the calculations to see who has generated the most premiums with the same amount of capital. Yeah, that might be a worthy metric to do, but that sounds like work. So I'm not sure I want to do it. It's easier for me to just look at the price, look at the value, and call it a day. What's up, Deck? Don't believe MSTY are allowed to hold any actual shares. 0. That's probably true. I think it's no more than 25% of a single equity. So I think if they held any shares, they wouldn't be able to get the margin exposure like they can with the synthetics. But so it might be. I think legally they can, but yeah, functionally, I don't. I think you're absolutely right. They also don't choose a price. Let's see, they don't choose a synthetic position price. When the old position ends, they just open a new one at the current price. Watch their chat with retire on dividends. Is that a yield max thing, or is that somebody covering yield max? A retire on dividends, peeps. Patrick says on the retire on dividends channel, MS2 basically said they sell calls at whatever the market tells them the expected premiums should be, like they have an expected income to generate, and that's it. Yeah, I think I heard Jay Petrocelli say something like if implied vol is 100, then they're targeting 100% returns, 100% dividend returns, something like that for the year. They just sell as many covered calls at the money to get the premium equal to the IV to pay out. Recently, they only wrote covered calls on 50% and 75% to keep more upside as IV expanded. Yeah, he even mentioned like he was like, not financial advice, but IV's low. This might be a buying opportunity, a call buying opportunity instead of a call selling opportunity. But that's also why, we still do have this very low implied vol environment. So even if I'm selling this covered call for 1100, I can buy two, almost three of these long calls to compensate or to keep myself exposed to upside. Oh, I can only go to the 860s in October. December. Yeah, those are pretty expensive though. I'd have to sell two weekly covered calls to be able to afford one of these. So I have to figure out what that trade-off looks like. Patrick said, oh, I'm sorry, I missed this part. Starting to nibble at Metaplanet's over-the-counter US ticker, MTPLF. Climb's breakdown sold me on the idea that they will compete with Strategy's holdings in the next few years. Compete on a prorated basis, right? Compared to their total. Um, like their Bitcoin per share accumulation, right? But not like, or is he really saying that he thinks that like Metaplanet could get to 1 million Bitcoin before strategy? That doesn't seem likely. But I mean, I guess if they continue to execute, I don't know. That would be pretty impressive. I think it goes back to Jeff's like tree analogy. So I guess they did a bunch of calculus, and the forestry department tracks trees based on you know, different parts of their life cycle. They have exponential growth. And so if you were betting on a particular tree during its growth phase and just rode that company for that part before the growth smooths off, you might be able to time it, right? Every single company that adopts a Bitcoin treasury strategy might have that early S curve phase, and you might be able to get bigger returns. But I think the other part of that analogy is that, and I do think that Metaplanet is well run, like Dylan is killing it over there. But some of these other companies, I don't necessarily trust as much. And if they fuck up the execution, then as soon as the wind blows, that young tree might just get snapped in half. And so strategy is the first seed planted in the desert, really. And there's going to be a forest of trees at some point, but strategy is going to be the biggest, the strongest. It's going to be able to weather all the storms, and it's going to provide shelter, basically for this new forest to grow. And some of the meta planets and the semblers are probably going to win, and they will. And Japan, meta planet's got a lock on Japan, so maybe they're the first seed planted in the Japanese forest. But it's all a trade-off, because strategy's proven that they can do it. They've already weathered a bear market. They learned not to encumber their Bitcoin. So even if Bitcoin goes to zero, there's no margin call. Some of these other companies, may be taking on more leverage than they can handle. Strategy's is developing more sophisticated tools, with the preferred offerings. So once those start to mature a little bit as well, there's going to be ways that strategy can lever and delever intelligently. And so I know a lot of people were pissed off that strategy didn't let the, quote unquote, let the price run in November. But when Bitcoin was doing this, so we got a pump November, December, all-time highs, euphoria, FOMO. So when Bitcoin went from 106 to 76 and dropped 30% of its value, do you want to be in a highly leveraged Bitcoin derivative, or do you want that derivative to deleverage? Like, wouldn't it be nice if we could trade at 1.5 or 2x up, and then when Bitcoin corrects, we only trade at 1x down? That would be pretty fucking fantastic. Um, you know, People say, "Oh, the MNAV, we have to have a high MNAV." Right? You want MNAV to be 2, 3, 4, 10. Can we get a 50x MNAV? Well, yeah, I would love a 50x MNAV when the price is going up 50%. When Bitcoin goes up, actually 100%, 100% since September, right? Almost. Yeah, I want a 50x MNAV on strategy when Bitcoin goes up 100% in a couple of months. Do I want a 50x MNAV when Bitcoin craters 30% in 4 months? No, thank you. I don't really know. I don't have any inside scoop on whether strategy is gaming this in this way. Like, hey, let's pump MNAV when Bitcoin is pumping. Like, I mean, nobody really knows when Bitcoin is fucking pumping anyway. But is hitting the ATM at all-time highs. Oops. If strategy hadn't hit the ATM, and this is all speculation, right? I don't know how much effect this had. But every time, excuse me, every time that they use the ATM, it's reducing the leverage. So if strategy was still as levered at the end of December as it was in the peak in November, would we have seen 200 a share? I don't know. But people would have blamed the ATM for us going down when in fact the ATM might have saved us from correcting down another 20-30% off of this. But it would be pretty cool if strategy was able to, add the convertible bonds, um, hit the ATM on the preferreds, leverage up when Bitcoin is pumping, and then hammer the ATM and deleverage, right? They got all these levers that they can pull. I don't know. I don't know if it's possible, but I like thinking about it. So that is my silver lining. That's my ATM silver lining of the day. My cup is half full type shit. Or I could just be a deluded fanboy that is, you know, maybe the I'm just here to market and pump sailors' bags for no pay. Patrick, Metaplanet MNAV is 3x, but they have a chance to 10x their Bitcoin stack over the next year or two. So you're essentially paying 3 for $10 of value. Can't beat that. Yeah, when Meta, let's put it this: some people were asking like, "Oh, hey, should I take off 10-15% of my strategy position and diversify into Metaplanet?" And there's nothing wrong with it. Like I said, you know Dylan's a friend of the show, and I mean he's part of the group, so it's not like he can basically go on air anytime he wants. But he's executing well. But as soon as as soon as they get options, it's going to be real hard to resist. Let's see. They have a strong retail base in Japan. The carry trade in their favor. 3x nav. So ramped Bitcoin torque. Yeah, they like to call it torque. Dylan Leclerc is no slouch. Absolutely. Their Bitcoin yield this year is impressive. Can't disagree with anything you said. Let's see. Cheaper, lower exposure approach is BitQ since OTC is not on Tasty. Maybe in Robinhood. The fees are high to purchase OTC. Yeah, no problem. Let's see, Patrick. Keeping with the tree analogy, large trees in a forest distribute nutrients to younger trees through fungal networks attached to the root systems. Strategy similarly helps other Bitcoin treasury companies. Yeah, that's a fantastic point. They actually freaking communicate through those fungal networks too. I can't remember where I heard it, but there was a there was a tree that was still alive, even though it like I think it like snapped in half or got struck by lightning, and all of the fucking leaves were gone. Like the whole top half of the tree was completely missing, and the other trees, like some philanthropic freaking charitable donation, was actually feeding this half dead tree through its roots, and keeping it alive. So it's kind of crazy. But yeah, there's going to be a lot of companies that are able to shelter under Strategy's canopy. But at the same time, if you're a shit company, you're probably and you're just trying to leech to a certain extent. You know, Strategy could end up blotting out the sun and choking you out if you can't feed yourself. Sailor retweets Meta Planet's purchase announcements too, so I think he sees it and is perhaps taking notes. The higher the MNAV, the bigger the purchases of Bitcoin. Yeah, the only thing that I don't like about them having an MNAV target is I think it's Goodhart's law. Um, when you have a metric and it becomes a target, it ceases to function as a metric because when you're measuring it, everything is fine. But when you measure it and then you try to achieve a certain metric, it starts to distort your ability to actually measure it properly. And you might take certain actions that that alter that thing. So it's and I really don't even see it as a change in their philosophy, right? Their their um, obligation is to try to deliver value to the common stock shareholders with which means the number go up, right? The share price should go up. They should take every action they can to get the price to go up and stay up. And you can't do that without increasing the MNAV. So I don't really think having an MNAV target is necessary, and maybe it even is a barrier to I don't know, to price discovery or just doing the right thing. Like, oh, I need MNAV to be between 2 and I don't even remember what the hell their target was, but let's just say between 2 and 4 or something. Like, I like their transparency, but I don't necessarily like that much of their playbook necessarily being too predictive. I might be on the Josh Mandel camp with this part because I think one of his main complaints was hitting the ATM gave the shorts too much exit liquidity. And I think if MNAV is too easy to calculate, it's so easy to calculate, and if strategies like, okay, we have an upper range to our target of our MNAV that we're trying to achieve, does that give you know too much information to the short sellers? What do you think about Josh selling his strategy position the other day and his recent very strong repeated rejections of Sailor's continued use of the ATM? Um, I mean, I obviously I haven't trimmed my position, um, but it's Bitcoin is imposing the free market on the world, and part of that is a free market of ideas. What was you know what? I'll say it this way. I remember when Tesla sold some of their Bitcoin and they asked Michael Saylor about it, and they're like, "What do you think about Elon Musk selling such and such amount of their Bitcoin stack?" And I think he said something like Like, well, I think it means they have less Bitcoin. And so, um, Josh has got less strategy, and if the number goes up, he won't get any of it. Um, but it's kinda nice. I think some of the criticisms of the True North group as a whole is that we don't disagree enough, right? Like, "Hey, can't you bring some people on the show?" Or, "Do you guys disagree about anything?" It just sounds like we're all kind of in lockstep, so it's kinda nice having Josh, um, rattling cages and, providing a little bit of, negative feedback loops or whatever. Um, and I think some of the things that he sees in the market, he sees so clearly that maybe he's like, "Why isn't this obvious?" Like, "Why isn't this obvious to, to Sailor or Strategy or whatever? Like, you guys should be doing this kinda stuff." But I haven't had any in-depth conversations with Sailor. I got to meet him at the Bitwise conference, and, I mean, I listened to him talk for probably, I don't know, half an hour, but, I think I only asked, like, one question. But it seems like he doesn't want to, he doesn't wanna occupy anyone else's niche. So, the short sellers have their place, and the people who wanna go long have their place, and yeah, like, everybody's got their little role in the ecosystem, and theirs is to stack sats, it seems like. So, um, but they're also still learning, right? Like, they were they broke ground when they started buying Bitcoin, and so nobody even knew if that shit was gonna work. Um, they started doing all their convertible bond offerings. Nobody knew if that shit was gonna work. They start hammering the ATM. Nobody really knows what's gonna happen until that shit happens. Um, unless you can see the future like Josh, then you know what's gonna happen. But for everybody else, you kinda have to do stuff, and then when the dust settles, you're like, "Oh, that had the intended effect, or that didn't have the intended effect." And, and then you keep going from there. What's gonna happen with the preferreds? I think the preferreds are kind of like a really nice self-correcting mechanism. There's only, like, one environment where you can't hit the strike ATM, and that's, like, if strike and strategy are both down in price, that's, like, the only environment, in my opinion, that you can't hit the strike ATM. But if they're both up, you can hammer the strike ATM. If strike's up and strategy's down, you can hit the strike ATM. Um, actually, maybe if strike is actually, you can do it if strike and strategy are both down. Maybe it's if strike is down and strategy's up. No, no, I'm sorry. Actually, yeah. So if strike is down and strategy's up, you could still hit the strike ATM, and that even might be a way that you could reduce your leverage, um, kind of like an end around to ATM. Because if strike is trading, if strategy is trading at a 10 to 1 to strike because you hammered the strike ATM so much, then people are just going to take the conversion, and they'll take their, if strategy was trading at 1,000 and strike was at, they were hammering the ATM so hard that it couldn't go up over 100. Um, they could technically not really force people to convert because they convert when they want to convert, but who wouldn't take a 10 to 1 conversion to common stock shares if Strike was still trading at $100 a share and Strategy's over 1,000? Like, it's kind of a no brainer. So you could you could you could still hit the strike ATM even if strike was down and strategy was up if you wanted to nudge the strike shareholders to convert. And then suddenly they're not leveraged anymore because now strategy doesn't have to make any of those interest payments to the strike shareholders every quarter. Um, so yeah, there's all of these levers that they can pull, and we're all speculating right now on the effect that they will have. But I think strategies like, you know, the saying you can just do things, right? I think I think strategies like, you know what, fuck it, we can just do things too. And some of it's gonna work, some of it won't. And you know, you gotta take some risks. And you know, if you're disrupting, you want to be innovative. And one thing you gotta say is they're not a bunch of pussies, right? They're doing things that no one has ever done before. So yeah, it does raise my eyebrows when somebody like Josh with his you know, skill and knowledge of markets, you know, exits exits a position that size. It definitely makes me do a double take. But yeah, I haven't trimmed any of my position. So let's see. They are opening a U.S. Treasury Division 2, so the setup is there to outperform expectations in regard to MetaPlanet. Higher MNAV, more converts, more preferreds, etc. It's interesting that both Climb and Josh called the top on strategy and sold covered calls at the money. Now they are both out of the stock. Climb is all in on MetaPlanet now. Yeah, I've got no complaints about MetaPlanet, right? They're executing well. Um, you know, Dylan is someone that we know and is you know, is executing intelligently. So someone hitching their wagon to a Bitcoin derivative that's in good hands, I got no complaints. But you know, I'm not done riding the strategy horse at this point. Uh, the banking cabal can't be happy with a 10 trillion someday Bitcoin treasury company, right? Just my fear. Yeah. Yeah, and that might be a growing fear for me in the future, but for now, uh, I think I can tempt fate through a couple of cycles, at least through this cycle. All right, well, caught up on the chats. I don't think I have probably even really any trades to make today, but let's just take a look anyway. Let's just do some daily maintenance. 30 days to expiration. The price is up. You know, it's going to cost me a bunch of money to roll these now if I wanted to. So unless something is under 20 days to expiration, I probably won't bother. I don't think I have any money to spend. Um, I am fully covered on shares. I've got 1,500 shares, 15 covered calls. But I still have a bunch of unlimited upside with the Septembers, with the Decembers, the Januaries. So nothing really for me to do there. I've only had on the Tesla poor man's covered calls on for 6 days. And wow, these are getting destroyed. Good lord. Um, went to Disney World, so I wasn't really paying attention. And this is kind of the point. So let's just say I wanted to close these today, or I was worried that someone was going to exercise my 310s, right? And make me sell them 100 shares of Tesla. I've never really been exercised on, you know, with 30 days left. They'd have to be kind of dumb to do that because if they exercise this, they make me sell them at 310. They can turn around and sell the shares for 344, and let's see, that would be 3,400 in profit, right? But they could just, instead of exercising, they could just sell this damn thing and keep the 4,700 profit. So why would they exercise and only get 3,700, 3,400 in profit when they could just sell it and get 3,700? So that's why generally people don't exercise this early, because it would be kind of a waste. But yeah, so these are getting wrecked, but there's 37 days left. So the price could be 305 a share by then. Or worst case scenario, a couple of days before expiration or just whenever I feel like it, I can close these. And even though I'm losing 3 grand on the short call, I'm making 7 grand on the long call. So if I was going to close one of these positions now, I'd actually be getting a $11,700 credit. Now, if I hadn't sold this covered call, then I'd be able to capture the whole amount. I'd be able to capture the whole 16.5 that this is worth. But the whole point is you don't know if the price is going up or down. It seems like the market is going on a tear, and Trump himself even said, like, everybody buy stocks. Um, but this is actually these March, um, they were leaps, I think, when I bought them. But these are actually performing their function as well. So let's say that I did want to, I didn't want to exit this position because I'm bullish. Then each one of these is going to cost me 3 grand, but I've got 4 of the 630s, which would pay for, 10 grand of that. So that actually more than makes up for the $3,000 that I'm upside down here. So again, I'm selling, I sold these covered calls for 1,500. I started stacking some long calls with it. And then now that the price has gone in the other direction, I'm using the longs to pay for the shorts. If you can guess right and not have to do any of this shit, good on you. But, some people like to be, you know, delta positive, delta negative, gamma neutral, all that shit. This is kind of like arbing theta. So I'm short theta under 60 days to expiration, and I'm long theta greater than 180 days to expiration. Mechanically, the short sellers have an advantage under 60, which means, leaps and things like that. The buyer has a mechanical advantage with respect to theta. So that's just kind of how I look at it. Now, if I was bearish on Tesla and if the Fed said, "Oh yeah, we're going to hike interest rates 50 basis points or whatever. We're trying to rein in inflation," then I'm dumping these poor man's covered calls positions immediately. Um, I'm not going to hold leverage into higher interest rates, especially in like tech stocks. So you can't just do this any old time you want, but if you've structured the short with the long correctly, then no matter how badly I get wrecked on this short strike, I should be able to compensate by selling the long to pay for it. But yeah, no trades. That was a long way of saying no trades. All right, same thing. I got 30 days left here. Nothing to do. Performance covered call, 37 days left. Nothing to do here. Same. So I'm getting wrecked on the 310s again here. This one, I only have one long. I guess I bought a different strike and expiration date here. But, it's worth about 5 grand. So if I have to pay to roll this, it's kind of fine. All right, this one, smaller account. I can only afford the one poor man's covered call. This is still out of the money. I've only had it on for a week. Nothing to do here. Oh, maybe there is something to do here. So it looks like I've got my settled buying power because I sold this credit spread. I sold the 242.50 credit spread, two of them, for $2 a piece. And then I put in the good till close limit order to buy them back for half. So I pocketed $100 on each of these. I put up 1,000 in collateral for each. So I collected 10% in 4 days. It's not bad. 10% of the collateral I put up, I mean. So since I've got 2 grand available again, I think I'll just, I'm still bullish on Tesla. So I think I will add that position back on. I haven't really done much with credit spreads with strategy because even though they're pretty liquid, the bid ask spreads are kind of shit. And for spreads, every leg that you add just makes it harder to get a fill. So it's kind of a pain in the ass. So I'm actually going to be a little bit more risky and bullish with this one. A lot of times I like to go to the expected move. On Tasty Trade, this is the expected move. Anywhere between here and one standard deviation is kind of like a nice starting spot. This is kind of ballpark. But I also kind of like whole numbers. So maybe I'll sell the 300 and buy the 290. And I'm just going to eyeball this and make sure that this is still reasonable. So with an approximately 20 delta, with 1,000-point wide spread, right? I'm risking $1,000 for each of these spreads. If delta is an accurate representation of the chances that I win or lose this bet, then according to the Kelly criterion formula, I need to get paid at least 0.2 times the 1,000 to make this make mathematical sense. Just to kind of as like a general kind of like gut check thing. And since I can get paid, more than 200, I can get paid 235 at the mid price. If I lose this bet 20% of the time and I lose 100% of, what's left over, right? So it's worth $1,000. I'm getting paid 235. If I lose the 765 20% of the time, but 80% of the time I keep the 235, there's a little bit of an advantage here, if that happens. Now, if delta is not an accurate representation of how often I will win or lose this bet, then this doesn't fucking work. But it's like, it's good enough for government work. It's just kind of like an estimate. So if I was only able to get, like 185 or 150, I'm not going to risk 1,000 to get 150 on a 0.2 delta. That's the point. So since this seems reasonable, I'm just going to put this back on. And let's put the volume down. I needed like an AI bot to just automatically lower the volume for me when I stop playing music. All right, so it looks like I got to walk this down a little bit. Let's try to just below the mid price. Tesla's pretty liquid, so yeah, that's pretty quick fill there. So, and I don't know why, but like it's not updating switch the trade there to trade. Okay, there, Tesla's appeared. I had to refresh it somehow. So I'm going to do the same thing. I want this. Let's see. I sold it for what's it? I sold it for 229. So if I want to buy it back for half of that, that's a $1.15. So close position, and I think you can just do at 50% profit. Let's see this. It's going to go to 115. Yeah, perfect. Good till close. Review and send. And so now I've got this working position here. So it's a $10 wide spread, which is risking 1,000, but I got paid 230. So I'm really only max risking 760. That would be the max loss if June 27th we're trading under, 290. I'd lose 100% of the 760. All right, so that's fun. At least I just didn't do nothing today. All right, so my brother-in-law and I rolled our we had $5 puts in Riot and Iron, and we ended up there was only I think we sold them for 15 or 20. There was only like $5 left, so we went ahead and rolled those out to 627. That's really the only trades that I made offline. And you know, the total portfolio you need for that was $1,000. But you have to realize that here's the problem with unlimited or with limited upside, you know, call selling or option selling positions. In order to get that same kind of return, now we're having to sell the $7 put and the 6.5 put to get those similar dollar amounts. But now you need an account that's 7 plus 6.5. So now you need 1350 to be able to and I think we added this one as well. So we added a 6.5 put. So now you need like 2 grand to do these 3 positions. And eventually, like if you only have $1,000 in your account and Iron's trading at 2 grand, then you're priced out of it. Maybe you got to go down and do Wolf or something. Maybe Wolf pumps to $6 a share. So a stock can get so expensive that you're just priced out, right? That's what limited upside means. Let's see. This one is 620, so no need to roll that one yet. I'm holding on to this 110.80. I could probably triple my money on this thing, but I am just gonna hold it till maybe July, or excuse me, not July, June, mid-June. It'd be time to roll this. Either take profits or roll it out. I think I sold some already. Yeah. So I had 3. I sold one at 700, one at 800 approximately. So I'm just kind of holding on to this one. Do I have buying power? So I've got 4,700 in cash, and I only have 2,000 in obligated in collateral. So I've got about 2,700 to spend. So let's do. I think Riot is the most liquid, followed by CLSK. What positions do I have? I've got Iron. I've got Riot. I've got 100 shares of Wolf. Everything else is puts. So I don't have any CLSK positions here. How many Riot puts do I have? 1, 2. All right, with my 2,700 bucks, I must have had something exercised or shares called away in order for me to have cash. I don't know. TLSK. I can probably sell two. With 2,700, I might be able to sell three. Hmm. It's only 2 days. I'm going to sell two. See if I can get fills at the mid price. Probably not. There's a shitload of open interest though. All right, so I'm just gonna replay this. I just need to fill. I need to go about my day. I'm making the argument that this is too time consuming by trying to squeeze a penny out of this. All right, cool. So I could do one more at the 9 strike. Maybe I'll just add a riot. I don't like cash. I just don't like adding too many positions because then it starts to make it kind of annoying. But yeah, that's another thing that you can do to make your trading take less time is just, you know, have less positions. Uh, Dak, in my opinion, Josh's main point is strategy now has vastly more Bitcoin, but the share price is no higher when Bitcoin is back to high levels. Yeah, I saw that post. Um, yeah, I'm not sure. Yeah, like what's the time lag? Like literally minute to minute, is it supposed to follow Bitcoin's price action? Or, I mean, let's do a year. So I'm just gonna flash back and forth. Like these charts are very similar, but you know, there's this big chunk of FOMO, this euphoria for strategy that doesn't exist for Bitcoin. So the overall general shape is very similar, but it's not like they're carbon copies of each other. So it would be kind of cool to overlay strategy's leverage ratio across this as well, because their Bitcoin holdings might justify a higher MNAV with more leverage. When we were still correcting from March, like what if the fair price for strategy was 150? I mean, were we overvalued when we were at 170 and undervalued when we were at 128? Like the market just does things. Things get oversold until no one is willing to sell at those prices, and then they get overbought until no one is willing s- um, to sell at those prices anymore. And then the price goes back up and down again. So it almost kind of seems like you should be able to draw some kind of flannel channel and strategy is going to, ping pong around in between some kind of reasonable distance from Bitcoin's floor. Like their, 1x MNAV on their Bitcoin holdings should be strategy's floor. And if it trades below that, that's an extremely, extremely big discount, in my opinion. I don't necessarily look at like, oh, 2, 3, 5x MNAV is like that's a selling target, but I know damn well that 1x is a buying target for me. But yeah, I just wonder how many other, there's tons of factors, right? So, there's interest rates, there's their leverage ratio, there's all kinds of stuff. Uh, and then there's the fact that the market is just irrational in general. What's up, Howard? Lottery tickets don't give you a chance at the jackpot if let go of if you let go of them before the drawing. Yeah. Well, Josh has already hit the lottery at this point. I'm just going back in for another bite at the apple. Oh, and then if we were back near the momentary MNAV blow off top, the price would be closer to that expectation. Yeah. Yeah, I think that's right. And so really, I'm just waiting for, people are saying, "Where's the IV?" That was one of the questions that I was asked at the True North MSTR True North conference at Strategy World. And I think I think the IV is basically just waiting for the leverage to come around. No one at the current leverage ratio right now, the call buyers are simply not willing to pay higher prices if it's not a levered product. It's strategy is kind of like strategy is their own version of MSTU or MSTX, which is weird because those are leveraged on top of leverage on top of vol. But yeah, so if you want strategy to trade at 1.5x Bitcoin, you probably have to carry a certain amount of convertible bonds and a certain amount of leverage with the preferreds. Whatever all that adds up to. If you get enough leverage, the market will probably say, okay, MSTR is worth trading at 1.5x MNAV to Bitcoin. And if you double that leverage, maybe MSTR turns into a 2x levered product to Bitcoin. Bunch of other macroeconomic shit could go into it as well. I'm not really qualified to say, but that's just kind of the sense that I get is that the market is waiting for the convertible bonds, the leverage before they're willing to pay higher prices for calls. If strategy is not a leveraged product, why would you pay leverage prices for the calls? So for me, the downward selling pressure of the ATM is not the reason to complain about the ATM. To me, the reason to complain is because if we want to trade at a higher multiple, the market is waiting for higher leverage. That's just my guess. It's not like I can say, "Oh yeah, 100%, that's exactly what it is," but that's just my general sense. All right, vacation is over. It is back to work. So, I should be doing my dailies again until the next time I travel. Have not decided if I'm going to Bitcoin World in Vegas or not. Um, I'd like to just go and not go to the conference and just go to all of the cool shit. So we'll see if that's even doable. All right. Appreciate everybody tuning in. Be good, y'all.